Good evening traders and welcome to Hautrader UK. It's currently Thursday the 6th of August 2020 and the time is currently 11:45 p.m. UK time. Traders, welcome back to the channel. Hope you're enjoying the content that we're putting out there. If you're new to the channel traders, come across, subscribe, leave a comment, press the bell icon, and if you've been here before, I want to welcome you back. Traders, hope you're enjoying all the content that we've been putting out here. I'm going to jump straight into the charts here because I want to carry out a top-down analysis, which I'm hoping that you're going to enjoy, because it's a top-down analysis that looks at a trade from the top end of the market, from the higher time frames. Now, what's the reason that we use the higher time frames? And what's the reason that we don't trade on the 5-minute, the 15-minute charts? Well, the reason for it is that the higher time frame carries more power. Okay? So if you're looking at a trend on the 5-minute chart as opposed to a trend on the 4-hour or the daily chart, the trend on that daily chart or the 4-hour chart is stronger than the trend on the 5-minute chart, as is support and resistance. Support and resistance on a higher time frame, let's say the daily time frame, is going to be a lot more important, a lot more significant than support and resistance on, say, a 15-minute chart. So that's why I always carry out my top-down analysis from the higher time frames. So I want to break this chart down quite specifically, quite in detail, and just to show you what goes into finding a high probability level to trade off. So let's jump into the charts here, traders. And what you will see here is, just follow my cursor. I'm here on the 3-month chart as the British pound, Japanese yen. Now, first of all, traders, what I want to say to you is that from a fundamental basis, we are bearish this pair. Okay, we think the British pound has a lot more downside to go, and we think that the Japanese yen, although the Japanese yen has been quite strong, we think the Japanese yen has got more upside to go. Okay, so what we want to do here is we want to sell the British pound, thus buying the Japanese yen, and that's why we want to look at this trade. Now, from a technical standpoint, if you look at this pair, what you will see for a long time now is we've got higher highs and lower lows here. Lower highs, lower lows. Okay, so we've got lower high, okay, and we're here now bottoming out on this area here. So because we're bearish fundamentally in this pair, we're only looking to sell. So I'm going to show you what I've seen, and I'm going to break it down for you, and I'm going to see if it turns into anything. It may not, but we're going to see. So let's go down to the daily chart, traders. Okay, and the first thing that I want to bring your attention to is I want to bring your attention to a Fibonacci swing. So let's just get that Fibonacci swing in play first and foremost. And this is where I'm taking the high of my Fibonacci swing right down to the bottom here. Now, what do you get here? Well, what you've got is this white line here is a 618 retracement. Okay, the most popular Fibonacci retracement, and this green line is a 67.8 Fib retracement. Now, why 67.8, you might ask? It's random, guys. It's random. But what I've recognized is that around the 618 retracement, prices get manipulated. Okay, institutions, big traders are expecting people like you and I, retail traders, to trade around those levels. So what I find happens is that typically people like you and I get taken out there. So what I've created here by doing this is giving myself a zone for price to take out those traders who get in prematurely at the 618 level. So, but we'll look at that in a bit more detail as we continue through this top-down analysis. So what I'm going to do here is I'm just going to highlight these two areas just so I don't have to leave the fib extension on. So what I do, okay, let me just now go to this line here, grab a template and put in the 618 retracement line. That turns that line white. and then go to this line here, do the same thing and grab the 67.8 retracement. Beautiful. Okay, now, so there we have a 618 retracement, and as you see, price has gone up into that area here, okay, been rejected, come back down, and now price is up into that area again. So as I fatten this up now, I want to bring your attention now to these two wicks at the top here. Can you see those wicks, guys? Okay, those wicks are going to be important as we go through this top-down analysis, but I want to reference those wicks. So I'm just going to place a vertical line above there, above those wicks, just to give me again a bit of a zone. And I'm going to put that, I'm going to make that horizontal line. I'm getting my verticals and my horizontals mixed up. I'm going to make that horizontal line yellow. Okay. Now, what you've got, the other thing I want to show you, okay, is I want to bring your attention to this move here. Okay, now just look at this for a moment. If I grab my line tool and I drag my line tool up, just taking the tops there, okay, and I get my line tool again and I drag my line tool up across the lows. Okay, so what I'm doing here is just creating some dynamic support and resistance as a channel, basically. Now, what you will see is that at this 618 level, okay, we have a move which is encapsulated within this channel, and remember that we're bearish this pair, so I'm actually looking for this pair to go down. However, all right, we've got some things to consider before this pair goes down. Now, I said earlier I wanted to reference the wicks on the top of these bars here. Now, why do I want to reference these wicks? Well, the reason for that is because I said around this area here, the 618 retracement area, price gets manipulated. And if you can see here, let me just fatten this up now. Let me just fatten this area up. If you can look at these two bars here, and look what happened to the wicks. The wicks went through the 618, both of them, through the 618, okay? And then price eventually sold off. Let's mark that up. Price eventually sold off. Now, what I want to bring your attention to is what happened here, guys. What happened at the 618 retracement? Well, this is my theory. There will have been a lower time. Let's go down the time frames because I want to show you what I think has happened. I'm going to go, just for argument's sake, let's go down to the 10-hour chart. And here's that area right here. Now, what you will find is at this 618, many an inexperienced trader will have been looking to go short. Okay? So you will have had traders sat at that line there, at that 618, waiting to go short, and they would have gone short. Okay, and what would have happened, and what I see has happened here with these 2 weeks, is that the institutions who need sell orders, who need orders to go short, will have pushed the stops up through the 618 area, okay, taken out the people who were short at this line, fill their shorts, okay, and push the price lower. Okay, so this is, have you ever been in a trade where price just pips you out and then goes in the direction that you were sat at? That's manipulation, guys. And what I think these wicks represent at levels of, important levels of support and resistance and Fibonacci is, as far as we're concerned, the retail trader, the institutional trader knows where we place our stops. Okay, typically 618 is where we trade. So I'm trying to not to trade in those typical places. So let's get rid of these. Let's get rid of these tools here. Now, back up to the daily chart. So what I'm thinking is this. Obviously, we're already in a zone here. Okay, 618, 67.8 zone. I've referenced the top of these wicks. And the reason I've referenced these top of these wicks is because I believe this is where the next manipulation might take place. Now, tomorrow is non-farm payrolls. And again, non-farm payrolls is not something I normally trade, but I'm not actually trading non-farm payrolls. What I'm thinking, this is my trade idea. Let me just draw something out for you. Okay. That is actually the wrong tool. Let me just get the right tool. This is the tool that I meant to get. This is basically like it's an Elliott wave count, okay? And I've used the wrong tool again. One moment, guys. Sometimes there's so many tools involved, you just gotta, that's the tool I need. That's better. That's more like it. Okay, but you get the idea of what I'm thinking here. Okay. So potentially, this is what could happen with this trade. Okay, we're in a wave. In fact, I've done that. That count is actually wrong, traders. Let me just do that again. I just realised I've just done something wrong there. Let me get this. Now, this is where I should have started. That's better. That's better. So what I've now identified, okay, let's just bring that down a bit. I've identified a level. I've identified a level that price is going to, I believe that price is going to get manipulated at. But I don't believe the 618 is that level. The next level that I think is prime for manipulation is the top of these wicks, guys. The top of these wicks is the area that I think might get manipulated. As I said, tomorrow is non-farm payrolls. And what I'm going to try to do is I'm hoping for some volatility. I'm hoping that traders are going to want to try and take out these wicks before pushing prices down. So this is what I'm thinking is going to happen. Prices are going to push up into that area and then continue down. Now, potentially, prices could get to the bottom of this channel and then push back up again because this count is not actually over. But what I'm actually hoping is that price actually pushes down and carries on. But let's say price does push up from here, then hopefully price won't take me out. So this is the logic behind this trade, guys. So what this means for me is I'm going to put my entry above these wicks, and I'm actually hoping that non-farm payrolls is a wild one, takes out these highs, okay, and then moves in my direction. So what I'm going to do is I'm going to place a limit order above these wicks close to this 67.8, hoping that I get taken in and then price turns at this level. So guys, you can see how I've identified the level. You can see how I've brought Fibonacci into the picture. You can see that I've used Elliott wave. Okay, you can see that I've used support and resistance, dynamic support and resistance as far as this channel's concerned. All of these point to this level. What I'm trying to do here is not to be a typical retail trader. I'm not just going to trade and look, guys, let me just hide everything for a second. Look at the nature of those bars there. Look at the wicks of those candles. I believe those candles are trying to suck me into getting short now. I believe they're trying to suck me in to get short now, and then tomorrow or whatever, price goes up to here, takes me out and pushes down. But let's wait and see. That's my theory anyway. So we're going to wait and see, but this is what I'm going to do. Where's my tool? Here's my short position tool. I'm going to place a limit order above these wicks. In fact, I'm going to place it quite close to the top of this 67.8. I'll place it in between, so I'm going to place it there. That didn't work for some reason. Let's get the tool again. I'm going to place my limit order above the wicks, let's say just there. Okay. Now, let's bring things to this way a bit. Let's just narrow things down a little. Where do I want my stop to go? Well, I certainly don't want my stop to be 200 pips. So let's bring the stop down. Okay, and let's bring this fella down here a little. So Now, let's have a look at this situation. I've got 75 pips worth of risk here. Okay, I've got 75 pips worth of risk. So that's a little bit high for me, 75 pips. So I'm just gonna I'm gonna make this worth my while. So I'm gonna bring my entry closer to that 67.8 line. And that allows me to bring my risk down. Oopsie daisy. Oops, 1 second there. That allows me then to hopefully bring my risk down. I'm going to need to come down the time frames for this, I think. I can see what I'm doing. Right, this is the problem here. So let's bring this. There's my entry. Let's bring that entry down a bit. Okay, so let's give it a little bit more room there. 66 pips of risk. Okay, let me just see if I can just bring that in a bit more. So we've got 66 pips worth of risk. Okay, 13.7 to 1 risk reward. Let me just have a closer look at where I'm going to place my exit. Okay, well, I'm not gonna get greedy. Yeah, we're bearish this pair, aren't we? So we're expecting this pair to continue down. All right. Can you see this level down here? This level right here. Let me just have another look. Okay. I referenced this point in a trade that I tried to take earlier and actually didn't get there. But we actually, because we're bearish this pair and we're very negative, the British pound, we think over the long term the pound's gonna push down. So what I'm gonna do is I'm gonna place my stop on just above this shelf here, just above this area here. So guys, that's the trade I'm looking to take. So this is how I look for levels in the market, okay? And then I use the smaller time frame, and I take long-term swing trades based on the higher time frames. So let's enter this. Let's enter this this limit order in front of you. Okay, so let's hear what do we want to do? We want to sell the market at a limit, so we're good to go there. How much do I want to risk? Let's just put in 0.75 and see what that means to me. 0.75%. That's a beautiful risk to reward trade, guys. Look at the risk reward ratio on this trade. 21.29 to 1 risk reward ratio. All we can see what happens, guys. Price has been down there before in this year, so it's not beyond the realms that prices could get back down there. So let me enter this trade. And there you go. Limit order entered, so I can clear this down now. Let's remove that. And there you see my limit order has been entered. So I can get rid of this. Okay, limit order is entered. And there is price. So let's see what happens. I mean, as I say, I'm trying to use non-farm payrolls tomorrow to just nip me in. And then let's see if this works out. Again, it's about putting the probabilities in your area in your favor, but not trading around obvious levels. Traders, I'm going to leave it there for now. Let's just see how it goes. You know, you've seen the process. Let's see if it works. Again, all of this is within my rules. We're bearish fundamentally, so that's why we're looking to go short this market, and I've shown you the reasons that I want to go short. So traders, look forward to talking to you again soon. You're not going to need many trades like this to make it a profitable year for you traders. You know, look at how many losses do you need if you get this trade. How many losses can that take up? Traders, this is why I swing trade. Catch you soon, traders. Keep trading your plan. Keep falling in love with the process, and you will become consistently profitable. Speak to you all soon, traders. Take care now. Good evening, traders, and welcome to Hautrader UK. It's currently Thursday, the 13th of August 2020, and the time is 33 minutes past 9 PM UK time. Traders, if this is your first time to the channel, I want to welcome you to Hautrader UK. Hope you're going to enjoy this short little presentation that I put out for you. If you've been here before, traders, welcome back. Guys, you keep stunning me with the comments and with the positive comments that you you talk to us about here on Hautrader UK. I hope that you're getting value, guys, and I hope that you're starting to see a methodology here which allows you the time to look back at what you're doing. We're not day traders here, we're swing traders. We're looking for the bigger trades in the market, okay? So we have time. We have time to look at the setup. We have time to look at the fundamentals if that's how you trade, and we have times to spot levels and make a trade. Now, the reason I've started this presentation with those words is I want to show you how I have I want to show you a trade idea that I had, and the original time that I had this trade idea was back on the 6th of August, guys. Now, as you can see, we're here on the 13th of August, some 7 days later. Okay, now my reason for entry didn't play out as I wanted it to, or for the reasons that I wanted it to, but it did play out. And this is going to be a lesson in spotting a level and being, breaking down the bigger time frames to find a lower time frame level. But I'm going to try and keep this trade short. So let me just jump across into the chart. So remember, we're here on the 13th of August. So when you see the previous, or the part of the video where you see me breaking down the top-down analysis, you'll see that we did that on the 6th of August. So let me jump into the pair. The pair I'm talking about is the British pound, Japanese yen. Now, I want to just quickly tell you where I am with this pair and why I am where I am with this pair. We're currently bearish, the British pound, Japanese yen, and what's the reason for that? Well, if you look at any fundamentals, and we're doing that more and more in our trades, we're looking at fundamentals and we're trying to trade in line with the fundamentals. Typically we're technical traders who are now looking to change slightly to try and better our trading, and looking at the fundamentals is something that we're looking at more and more in our trading. And what that has been doing is giving us the confidence to trade in a particular direction. Now, the question I just asked is, why am I looking to trade? Why am I bearish the British pound, Japanese yen? Well, if you look at the fundamentals, the British pound has just been in the fundamentals. They've just said that the British pound has got has suffered the worst GDP losses of any country. Any of the world's top nations, the British pound has suffered the worst out of the top 7 nations. And for a small country like this, that is massive. Okay, that's huge. What that actually means is, fundamentally, is the British pound and the British economy is way behind other economies as far as GDP and performance is concerned. And what that actually should mean is that it's going to take us longer to recover. Now, the Japanese yen, why is it I want to buy the Japanese yen? So if you know anything about trading pairs, what you'll know is if I'm selling a pair, I'm selling the first pair that appears in the pair. I'm selling the first currency that appears in the pair, and in this case, I'm selling the British pound. Consequently, that means I'm actually buying the pound. So I want the British pound or the Japanese yen to appreciate against the British pound. So that means I'm buying the Japanese yen and selling the British pound. So the next question I want to say to you is, or ask you is, why do I want to buy the Japanese yen? Well, first and foremost, we are in what's called a risk-off environment. And what a risk-off environment is it's an environment where investors are wary. Okay, they're wary of where they're risking their money. They're wary of the risks they take. So it's called risk-off. Typically, in a risk-off environment, a pair like the Japanese yen does very, very well. Okay, it appreciates. So I'm looking, and that's the divergence that I have here. British pound, worst GDP figures. Japanese yen, risk off pair, should appreciate. And that's the reason for me having a short bias this trade. So the question is then, what happens from here? Well, back on the 6th of August, if you remember, I showed you this chart and I showed you this channel here, and I showed you what I was expecting of this channel. Okay, and I was expecting price to hopefully come up and take us in, come down, and potentially at this level price could take off to the long side again. But what I'm hoping is, because the British pound is doing so badly, price will actually just push through this channel and carry on down. Now, let me just fatten this up, because I want to just bring your attention to what I spoke about at length during that earlier video, which you will have seen by now. This, when I actually made this prediction, okay, I referenced these two wicks here, okay, and I placed this yellow line across the top of these two wicks, and price was actually down here. I think it was in these bars here, and this white dotted line is a 61.8 retracement. Now, what I said is that I don't want to trade typically where most retail traders trade, because that's how we get picked off, guys. That's how we get picked off by the institutions. They know that we trade around these levels. So what I'm looking to do is trade somewhere where most people don't trade. In fact, what I'm looking to do is try and get into my trade where the institutions trade. And in this case, I referenced the top of these wicks as being an area where price may get pushed above and then potentially return, because I believe the institutions want to sell this market, but they need traders. They need someone to take the other side of the trade to be able to fill their orders. And this is where I think the manipulation is happening. So what I did is I placed this limit order above these wicks. I put the yellow line in there as a line in the sand. But I needed an area of manipulation to take place, and this is what I believe has happened here. I mean, look at this, guys. Just look at what's happened here. I'm gonna remove the studies for a moment. Now we're here on the daily chart. Let me just come down to the hourly chart, and I mean, remember. Sorry, let me just put that back on a second. There's the yellow line. Just memorize that. Okay, just memorize that, and memorize the fact that actually when we looked at this trade, we were below this 618, guys. We were below the 618, and I said this is where the price typically gets manipulated. And then since then, look what's happened. Okay, this is where we were. I'm now on the hourly chart. Price has pushed up. It's pushed up even through our yellow line. Okay, so this is once we pushed above this yellow line, this is where I was expecting price to be manipulated, at this yellow line. And look at what's happened. Price has pushed up through the yellow line and then sold off. Now, does this mean this chart is going to continue south? No. I mean, I could still get taken out for a loss. But what I'm trying to show you here is the logic and the way you have to think when you're finding the level. As a retail trader, you would look at the 618 and you'll say, that's where I'm going to trade. But what you have to do is you have to be smarter than that. And you have to be conscious that you're actually having those thoughts around those levels and flip mode. Okay? And that's the kind of thing that we need to show you here. So that's kind of a painless trade, huh? I mean, there's not many pips in the high of that bar there. And as you can see, there's our red arrow. So that tells you this is the bar that we got entered in. Okay. And there's not much pain in this entry at all. Okay. And price has since sold off. Now, the next step of this trade is to get to break even, or how we manage our break even as quickly as possible. And if you remember how I do that, let me just grab my tool here. There's my stop loss, there's my entry. So the blue one is my stop loss, the red one is my entry. I take a vertical line, I drag it down, and I drag that down to my entry. Okay, so that now this vertical line now represents my risk in this market. I bring that down to my entry. Okay, so that then gives me a 1-to-1. So should price get down to here, we have a 1-to-1. But that's not how we do it anymore. What we do is we look for a 2-to-1 before we look to move, before we look to take off half of the position. So let me just put this a template on this, and let me just use the blue line. Now this blue line, as you can see here, says take off 50% of the position here. So there's a 1-to-1. Let me pull it down one more time. Okay. And let me pull the blue line down to here, and there's a 2-to-1. So this is where I will take off half of my position. I will leave the stop where it is, in knowing that in the fact that should price push up and take us out, we've made 2-to-1 on half of our position at least. Okay, so what I then do is I set myself a little alert here, once per bar, and what I like to do is cross down, and I like to say take off. Oopsie daisy, typing's not looking too good. One moment there. Take off half of position. Take off half of position. Spelling is all over the place. It's been a long day. That's better. So traders, I'm going to leave that right there. You'll see the clock appear any second now. There you go. So that tells you now that there is an alert in the market. Should price get down there and allow us to take off half our position. But who knows, guys? You know, our money's in the market. I've showed you how we've broken it down, so let's see how it goes. Traders, I will catch you all very soon. Hope you've enjoyed the little presentation, and keep sticking to your plan. It's one of the most important things in trading, especially in that psychology. Stick to your plan. Catch you all very, very soon, traders. Take care now. Good evening, traders, and welcome to Hautrader UK. It's currently Monday, the 17th of August 2020, and the time is 15 minutes to 7 p.m. UK time. Traders, if this is your first time to the channel, I want to welcome you here to Hautrader UK. And if you've been here before, guys, it goes without saying, we're very, very grateful for the response that we seem to be getting now, and the fact that you guys are becoming more and more interactive in this channel. The idea here is to grow this channel to as big as it can be, you know, and see that and you know, that's what I want to do. I want to see how big this channel can get. Now, one of the things that we like to do differently here on Hautrader UK is we like to trade live, guys. We like to show you our decision making. We like to show you the reason we want to enter a trade. We like to show you when we've entered a trade. We show you when we're moving stops to break even. We show you if we lose. We show you if we win. And it's as simple as that. And the reason that I do that is for transparency, and I want you to see that when through the live videos that we do, that there is a process at the very heart of every decision that I make in the market. There is a process behind it, and it's a process that's been back tested. It's a process that's been checked, and this system is not, you know, this is the system that I use, that we use here at Hautrader UK, is a system that I've built up over the years. It's an amalgamation of other things that from other systems that I learned. I can't sit here and say that I have thought about this whole thing from new. It isn't like that. I've just found that certain things work for my trade of styling. Now, somebody said to me the other day, can this methodology work on lower time frames? And the answer is absolutely yes, it can, because the market is fractal, guys. And what I mean by fractal is that whatever happens on a higher time frame happens on a lower time frame, just at different times and at different sizes. So if you're a day trader, okay, whereas if you look at the way I trade down from the 3 monthly chart up. If you're a day trader, you might want to trade from, I don't know, the daily chart down. Sorry, I think I said the 3 monthly chart up. I trade from the 3 monthly chart down, top down analysis. Okay, if you're a day trader, you may want to trade from the daily chart down and end up at the hourly chart for your decisions. It can work on any time frame. Now, I'm going to jump into this pair very quickly because I just want to give you a little timeline of what's happened so far. The pair that we're talking about is the British pound Japanese yen. Now, back on the 6th of August, guys, and remember, we're here on the 17th of August right now at almost 10 to 7 p.m. UK time. Back on the 6th of August, I said that I was interested, I was bearish this pair. Okay, and I gave you sort of very basic reasons that I was bearish, and although there was a lot more behind the reasons I was bearish, I gave you the very basics. Now, at that time, I pointed out a level that I was interested in, and I pointed out an area that I felt may get manipulated by institutions. Okay, and I left it at that. I set an alert and I left the chart at that. 7 days later, on the 13th of August, I got triggered, okay? And exactly what I thought may have happened, okay? And I'll go over that shortly. Basically, there was a manipulation of price at a level that we had seen, okay? And because we're bearish, we're thinking that the institutions want to sell this market. Exactly what happened, exactly what we wanted to happen, happened. Now, does that happen at all the time? No, it doesn't. In fact, most of the time, it doesn't happen. Most of the time, we don't get it like that. And most of the time, the entry happens totally different to the way we thought it would. However, what I was looking to try and do is I was looking to use non-farm payrolls to trigger us into a trade. That didn't happen, guys. Non-farm payrolls was a pretty much a non-event. But we didn't come away from our trade idea. We were still bearish this pair. So let me jump into the charts. Let me show you what has now happened. So remember, we got to the 13th of August, and here we are now on the 17th of August, and look what's happened. Let me go down this time frame. Let's go down to the 4-hour chart. Let's have a see how it looks there. Okay. Now, if you remember, this blue line was the area that I was going to take, or am going to take, 50% off of our position. And the reason we do that is to allow us just to take some profits out of the market early doors. Okay, and not only that, it's a way of us getting our stop loss to break even, and we do that in a way that allows us to leave our stop loss where it is. And the reason we do that is, should price now come up into this area, or into this area where our entry is, that's my entry right there, then I won't get taken out. If price moves further, I won't get taken out. It's only until price comes into the area of my stop loss do I get taken out. Now, how does that affect this particular trade? Well, from the earlier video, let's go down to the hourly chart. From the earlier video, from earlier on in this video, you will see that from here to here, and let's just see how far away that is, guys. I just want to see how far away that is. So this is our entry. Let's just see, and this is the blue line. In fact, this is where price is now. So this is, if you can see the bar, that's sort of just the last bar here, which is now just pushing up. That's where price is right now. So I'm going to take that to here, that arrow to here. Now, the reason I'm taking off half of our position is, as you can see, price has actually pushed through that blue line. It just so happened that I wasn't at my terminal when price got there. But the fact that price has got there tells me that I was right about this trade, and I now need to take off half of the position. Okay, so that's what I'm going to do in front of your eyes, guys. Let's just do that right now, so we know that nothing else changes in the market. So what I want to do is I want to modify my position. Now, this figure here, 138978, I'm just going to put that into my calculator here, 138978. That's our lot size. And if we halve that, okay, that then becomes 69489. Now, this is how it works. I want to get out of half of this position which we've sold. To get out of half of this position which we've sold, I've got to counteract that by buying half of the position to cancel out a full position which I've sold. So what I mean is, we are 138,946 represents the whole position. Half of that, 69,489. But we've sold the whole position. I want to get out of half, so I'm going to buy half of the position. So what I do is I put in I want to buy this market, and I want to buy it at market. And what market means is I buy it at the price we're at right now. Okay? And I only want to buy 69,489 of this position. Okay, so let me enter 69,489. Oopsie daisy, that could have got me wrong. And this is why I swing trade, guys, because little errors like that happen. You just saw exactly what happened there, and God knows what would have happened if I had pressed the button to buy. Okay, so here we are looking to take off 69,489, which is half of the position at this level at 115 pips. So let me just have a quick look over this and make sure there's nothing wrong here. It looks okay to me. And there you go, guys. And what you will now see is my position. And let's just get rid of this area here so I can show it you. What you will now see is the pound and pence figure has halved, as has the position. So we're now half this market, guys. So let's see what happens now. Okay, this trade has a long way to go. Let's just go up the time frames. Where is my take profit? Well, there it is down the bottom there, look. There's my take profit all the way down here. So if you consider that we've just taken off 50% of the profit, 50% of the position, look how far we've got to go. So I'm going to leave it there. I can't tell you when the next time is we'll talk about this trade. You know, the next time I talk about this trade is going to be if we get taken out with the profit that we've made, which is half of the position, or we enter, or I decide to take it off early for some reason, or we hit our profit target. But as you can see, we've got a way to go. So I'm going to leave it there, traders. Let me just get rid of that blue line now because that's been triggered. Okay, traders, I will leave it there for now. And thanks for watching, and I'll catch you all very, very soon. Take care, traders. Good evening, traders, and welcome to Hautrader UK. It's currently Thursday, the 27th of August, 2020, and the time is 54 minutes past 7 p.m. UK time. Traders, welcome back to the channel, and if this is your first time, I want to welcome you here to Hautrader UK. And if you've been back to Hautrader, if this is you've been here before, welcome back, guys. Really appreciate the banter that's going on this channel now and the trading talk that's starting to build in this little community. Now, I'm going to keep this brief. I'm just going to jump into a pair which we took a trade on. Now, let's just slow down a little. Okay, here we are on the British pound Japanese yen. Okay, and initially what I said was with this pair is that I was bearish this pair. Okay, and as I work my way down the time frames, let me just get myself down to the daily chart. Where we were is where we were just below. Let's just take off the studies for now. In fact, I'm going to need those studies. We were just below this white dotted line here, which is actually the 618 retracement of a bigger swing. Now, what I said was, what I was looking for is I was saying that at this dotted line, this dashed line, I said that I believe that price was going to be manipulated in and around this area, okay? And I was looking not to trade there. So what I said was I referenced these wicks as an area that price may get manipulated, and I would look to try and enter above that area. So what I did is I set a limit order above that yellow line, saying that what I'm looking for is for non-farm payrolls to take me in, hopefully hoping for a bit of volatility in non-farm payrolls to take me in, and then for price to turn round. Now, unfortunately, non-farm payrolls didn't play out at all. Non-farm payrolls was really a non-event from a volatility point of view. So what didn't change in our feeling about this pair is that we were bearish the British, and we are still bearish the British pound. So there was no reason to change this trade. But what I also referenced is this count here within this channel. And what I did say was that price was potentially could get to the bottom of this line and could reverse. And guys, look at what's happened. I mean, what I was hoping for, because I'm bearish the British pound, is that some fundamental news would push this price through that area and then send price tumbling short, tumbling down from here. And for a while, price did trade through that area, but not for long enough to send prices down. Now, what I want to point out to you is, as I'm just going to go down to the 4-hour chart, what I want to point out to you is the accuracy of this methodology that we use. Where we entered was somewhere around here, guys. Okay, where we entered was somewhere around here. And basically what that did is allowed us very little pain in this trade. What has since happened though, if you can see right in here, let me fatten it right up. Let me get rid of this. If I fatten it right up, if I go back, where's my red arrow? There's my red arrow here. That bar this is where I entered, just around here. There's a little blue bar there. There's a little blue arrow there in this, just below the blue line. I don't know if you can see it, but in this bar is where we took off half of our position. Okay. Now, when I entered this trade, guys, we were at 60, I believe it was 62 pips of risk. Okay. And what I did is I waited for a 2-to-1 on the position before I took half of the position off. So that left me with half 120 odd pips, guys. So what I then hoped for, what I was then hoping for, obviously, as I said, was price to go short this market. Now, what has happened is what I said could potentially happen, okay? And price got to this level here, found some support, and today, price, you can see this blue area here, price has taken us out for a minus 66 pip loss on the other half of the position. And the reason because of that is because when we take half of the position off, we leave the stop where it is, which just allows us some wiggle room for price to potentially move into a loss-making position or area and then turn and go in our favor. Now, guys, that didn't happen on this occasion, but what can I tell you about this trade, guys? Well, first things first, what I'm going to tell you is that I am still bearish the British pound, okay? And what are the things I like about this trade? Well, let me go to the daily chart. What I like about this trade is I was right about the fact that we could get a manipulation around the 61.8%. And in fact, the next area that I was looking to be manipulated at was this area here, which is this yellow line. And in fact, what happened was, let's have a fatten this up. Price pushed through that yellow line, okay, took out a lot of people who were short there, okay, took them out. So anybody who went short at this yellow line, actually at that yellow line, may have been taken out by that wick. Okay, let's go down a bit further just to drive this home even more. In fact, let me just get rid of that. Let's go down to the hourly chart. Let's see if that makes it look a bit more. Where is that entry? 1 second there. So there's my red arrow. Okay, there's the red arrow. So this is the area that I said could be, excuse me, traders. There's the red arrow that I said could be, or the yellow line that I said could be manipulated. And look at what's happened, guys. If you went short there, where would your stops be? Just above the yellow line. You would have got taken out and price would have went in your way for some pips, some profits, okay? Now, luckily, we placed our stop above the level that was manipulated and we got taken in. Brilliant entry, brilliant entry, and price went in our favor. Here's the blue line. Let me just move this here. Here's the blue line, which allowed, the blue tick, which allowed us to take off half of our position. Guys, is this trade a failure because we didn't fall off? Is this trade a failure because we haven't got down to the 1,000 pips that we were looking to trade? Well, the answer to that question, guys, is we made 66 pips on half of our position. If you can have a trade where you don't lose money in any trader's book, that's going to be a winner. Now, moving forward, guys, what's my bias on this pair? Well, as it stands, I am still very bearish the British pound. Now, here is what I'm going to look for. We are now at the 67.8 Fibonacci retracement. That's just a random retracement that I use to allow myself a zone. As you can see, price has now pushed through that, okay? Now, the good thing about this is another level that could get manipulated. I'm going to be watching this area very closely and these bars very closely to see what happens now after this penetration. So yes, we haven't made our 1,000 pips. Yes, we have made a 66 pips. And are we happy with that? Absolutely yes, guys, because once again we haven't lost money. Once again our entry has been spot on. Okay, now we had a suspicion that price could get to this line, get to this bottom of this channel and rally, and that's exactly what happened. But as I said, what I was hoping for is for fundamentals to change a bit more and push price through. That didn't happen, but it could still happen, guys, and that's why I'm going to keep an eye on this chart. So traders, I will leave it there for now. Thank you for taking your time looking at these charts with us. Hope you're seeing that, you know, this methodology works. Even when things don't go our way, we're making pips, less than we expected. Okay, but we still made 66 pips on half-hour position. That is a good result, guys. Now, what happens next in this trade? Well, let's see. I'll keep you informed. If I get a manipulation there, I'm going to keep an eye on the fundamentals, make sure that they still line up with my bearish feeling about this pair or the British pound, and if necessary, I'll take a trade again right at this level. So traders, thanks for looking in. Speak to you all very, very soon, traders, and I'll catch you soon. Take care, traders.